had a lot of questions about first-time home buyers or people who are thinking about selling their home to buy a new home. So let's debunk a few of these. If I have multiple loan officers look at my credit, what is that going to do to me?
Typically nothing, so that's a big misconception. So when you run your credit for a mortgage inquiry, the bureaus know that we're a mortgage company, and they let you go shopping, and realistically anything within a 30-day period gets adjusted to one inquiry. But it really has minimal, if any, impact on the score. Now, if you went out and got 5 credit card inquiries, the bureaus would be like, hey, why is Nathaniel looking for 5 credit cards? Is he having some issues that he needs all this credit? But for mortgage inquiries and actually auto loan inquiries, there's minimal, if any, impact. Where the tricky lenders are, what they do is I run your credit, and then I'll say, okay, Nathaniel, we got your credit at 740. Now don't run your credit again because you don't want your credit to go down. And what they're really just trying to do is trick you into using them and scare you into like not going out and shop. When in reality, you can shop all you want. It's not going to affect your credit.
Moral of the story, work with an honest mortgage guru like we have right here. Let's say I just barely graduated from college and I got my first job. How long do I have to wait before I can purchase a home?
That's another misconception, that you have to have 2 years on the job to be able to qualify. So typically school transcripts and school history will count as job history. So we've had cases, and we actually have, Nathaniel and I have a case right now, that that one of his friends just graduated school, got his first job teaching, and he hasn't even started yet, and we're using the offer letter as the basis of income. So we have to do a little verification on the offer letter, but he's not even started the job yet.
How do my student loans affect my purchasing power of a new home?
Yeah, it really depends on what type of loan we're getting. Each of the kind of main loans, it's Fannie Mae, Freddie Mac, FHA, VA, USDA, they have their own guidelines. And it could be from anything from what shows up on the credit report to using as much as 1% of the balance. And a lot of times it's like the greater of. But Fannie Mae just changed their rules where if they're on income-based repayment, we can use that income-based repayment as the payment that we have to count in the ratios.
So I heard that you have to have 20% down in order to purchase a home. Is that true?
No, it's considerably less. You can do loans with 0% down if you qualify income and credit-wise. The 3 and 5% are pretty standard. The 20% down is if you don't want any version of PMI on the loan. And on a conventional loan, if you have good credit, the cost of PMI has come down considerably over the years. So it's kind of a necessary evil. Like a lot of times I get, I'm just going to save 20%. For most people, like, you're not going to catch up to the inflation of a house. So it's okay to pay the PMI. Of course, we want to get out of it as quick as possible.
I've come across quite a few clients who are thinking about selling their home, but they don't know how selling their home is going to affect the purchase of their next home, especially when they have a lot of equity that they might be able to use as a down payment. How is that going to affect their purchase?
Yeah, so typically if we know they're going to sell it concurrently, and you would handle the sale, of course, we would exclude the payment for the current house and include the equity that they're going to get for the down payment for the next house. And then we've had a couple transactions where they've been concurrent transactions. They're usually pretty seamless. You might have to build in an extra day or two during the closing process. We want to make sure that we have enough time to close on a house, close on a new house, and then be able to move properly. But usually it's pretty seamless.
And once again, once you have a professional real estate team right here behind you, all of that's going to work out great. And Ken, the very last question that our viewers want to ask is, what's the craziest thing that you've had happen in the loan process?
Well, there's a lot of crazy stories. Sometimes people are their worst enemy. So I have a client that we recently closed. He quit his job in the middle of the loan process. We found that out through the verification process. We go to draw, he got a new job right away, and so we were able to update the loan and get docs out. And we were at the closing table, and we were required to verify that he's still working at the job within 3 days of the closing. And he quit his job again the day of close, and he forgot to tell us. And so we had to get the new job, the new job, on the loan application and kind of go through the process for the third time. Luckily, we closed. So the funny part is, I was asking my 9-year-old son, hey, what do you need to do to buy a house? He goes, I don't know, Daddy. We need to get insurance and maybe a loan. I said, hey, good answer. What do you need to do to get a loan? He's like, I don't know, have a job? And I'm like, wow, my 9-year-old knows it. Like, good for him. Like, hopefully he'll never quit his job during the loan process. It all worked out. We just closed on the loan. The guy's happy, but it definitely was kind of crazy that we had to go through it 3 times.